Welcome, ladies and gentlemen. Good day to everybody. Hope you're having a good time. We are live. If you're joining in right now, please go to the comments and let me know if you can hear me well. We are about to start. Now, it's NFP non-farm payroll Friday. And just as always, we are going to be breaking down my mindset. We're going to be breaking down how exactly I anticipate some of these speculative prices to move, right? And hopefully we could learn one or two things. Right, checking guys. Welcome. Beautiful. We have a few people joining in now, and the time right now as I speak is, let's see, what is the time, guys? What is the time? Gotta be very cautious of your timing. So it's 2 a.m. in New York. It's about 10 p.m. in Sydney. London is 1 p.m. So we're good to go, right? We are looking for that window period. We know that NFP will come in about 28 minutes. So we're set. What's up, traders, investors, and data lovers? Welcome to this live non-farm payroll trading session right here on YouTube. I'm your host as usual, so get your seatbelts on because we are about to start. Okay. Now, many of you have already been with me with these live sessions. You know exactly my mindset and how we get into this whole particular session, right? It's very important because it's one of the most volatile sessions that you'll ever find within any monthly time frame. And the reason being is it affects the economy, right? So if you've noticed, this session feels a little bit gives more emotions, right? More exciting because, you know, retail traders as usual, you know, they're always looking for a quick back. So here's what is happening. we have very interesting thing. Oh, by the way, guys, check out the link in the bio, right? Go check out the community if you're just joining in. If you're new, subscribe, follow, and you know, all that kind of stuff. I got a promo code for you so that you could get about 100% bonus on your first deposit. So you don't want to miss out on that. Every link is in the description. Now, without wasting any time, ladies and gentlemen, we're going to break down what NFP stands for, right? How does this affect the markets, particularly in 25 minutes from now, right? We want to start with the foundation. Now, the foundation, let's see. You want to go to this website, the official Bureau of Statistics, labor statistics. It's the official US government website that you want to look for this fresh data coming in. All right. And we're going to start with that. You want to ask yourself, what is NFP? Like, before you even get to it, why do the markets go insane when it drops or when it, you know, goes up? In simple terms, the non-farm payroll report, right? The non-farm payroll report measures the number of jobs added or lost in the US particularly, right? It's one of the biggest economies. So you want to be focusing on what exactly is happening. Why they call it non-farm payrolls is because it excludes the farm, government, and a few seasonal sectors that we're going to look into, right? Now, if we look at the website and we go to the employment and unemployment state, you want to look at the employment situation going on, right? So there's a summary here. Now, for purposes of this stream, you want to look at the summary, right? We break down during the weekend what really happens at the micro level. So as you can see, I've opened the chart now. Ladies and gentlemen, if you're just joining in, welcome. I'll be live across all social media, so you want to go check that out as well. We have 2 daily streams every day. Go check out my TikTok handle, my Instagram handle, and you know, all the other social medias. So I want this to be not only a real example of how the institutional side looks at some of these statistics, but you want to be very keen to understanding how to implement this, right? How to execute this. Now, without much explanations, the key is it's not just about this number that you see on Forex Factory, right? Because I know many retail traders just go to Forex Factory, right? And they wait for 3:20 p.m. or whatever time it is, whatever time zone they're in, and they just wait for this number. Now, we have a forecast, we have a previous, and we're looking for the actual. However, it's not just about that number, right? It's about what the number means for interest rates, for inflation, and for the Fed's next move, right? Now, alongside with NFP, we also get something very interesting which people seem to miss out on, and it's the unemployment rate, right? The unemployment rate, which simply tells us labor slack or strength, right? And I'll get into more details. We also have the average hourly earnings, right? Average hourly earnings, right there. Now, these are all very important data points. Average hourly earnings show us the wage inflation, the invisible driver of CPI, that is Consumer Price Index. So here's the sort of cheat code that I want to break down here as we enter this. If you've been missing this NFP live, please go and check out other videos, right, and see how I sort of structure this. Whenever we have stronger jobs, now what I want to do here is I want to pull up some charts here. Right, let us check out some summary. Might get like a summary table here. Let's see what happens here. All right, now household. We have some household data. We have a category. We have the time frame, right? We have March. We have quarterly, and so forth. Now, this might not really help you going into any trade because you have to understand this and develop ideas way before today, right? It means that if you were positioning yourself on any of these instruments that are affected by, say, the US dollar, or I don't know if you guys are into crypto. Oh, by the way, speaking about crypto, we have Bitcoin right there at about 80,000 right now, right? We're starting at a market cap of 1.6 trillion US dollars, right? With a 24-hour volume of 38.7 billion. Now, the reason I say this is it's very important to understand where the money is flowing, right? We also want to look at the altcoin season, right? It's pretty much low. The index is at 35, which is, just sort of testing the waters, trying to understand what speculators are in, and also parallelly look at what the institutions are doing. Now, ladies and gentlemen, with that little bit of background noise, if NFP numbers go up, right, what does that mean? Like, what does that mean, right? It means more jobs are added, simply. Non-farm payrolls, more jobs are added, right? And that is the major impact is on the US dollar. Now, if we have a situation where unemployment data falls, it means that the employment number is pretty much increasing, and that is a tighter labor market, right? And if we have average hourly earnings getting, say, higher, what does that mean? It simply means that we're having a situation where there's higher wages, which is an inflation risk. So when all three are strong, right, we're going to have a table here. I made an Excel table for you guys. So let's see, we have a signal decoder here that I was trying to put together. So if you have time, you could go to my community, check out the some of these free templates that sort of guide you if you're a retail trader and you are just jumping in. But the key is when all these three are strong, and I mean non-farm payrolls, unemployment rate, and hourly earnings, we start to see that the US dollar starts to rally, right? And typical instruments that are affected, like gold, should be dropping, indices as well. So you want to keep an eye on everything. That is why you gotta go check out the inflation and government bonds. You want to see what's happening over there and all that kind of stuff. But I want to draw your attention to what's happening currently. As you can see, we are getting spikes, so there could be some potential pricing in. Now, you also have to be able to follow what has been transpiring over the week. Remember, we are currently in a Q2, and we have seen a little bit of rallying going up, right? So if we get weak numbers, for example, if we get weak numbers across each of these indicators, right, it's going to simply mean that the US dollar is sort of tanking. And if it tanks, we get gold rallies, brief gold rallies, and indices rallies as well, right? Why? Because traders are always asking some of these questions. What are they asking? We usually get a situation where they ask questions like, why should it rally, right? Does this data push the Fed closer to rate hikes or cuts? It comes down to what the central banks are thinking, right? The people that are behind the decision making. We previously saw what happened with the Federal Open Market Committee, right? The FOMC report that decided to keep the interest rates at the same level, right? And all this is an aftermath. So you want to be keen to the seasonality as well. You want to understand and ask yourself questions. What is really happening to the economy? And if you have any friends there, you might also want to interact to them and try to get a micro perspective of what is really tweaking their economy. So you got to ask yourself, is the data pushing the Fed closer to the rate hikes? Now, you also want to compare what was in the report of the previous FOMC. So that is the heart of every NFP, guys. It comes down to the job market, okay? Jobs, right? It is the heart. The future interest rate. Of course, jobs are a key indicator of how the central bank will pretty much want to stabilize the economy. So this week, I want to start with the current battlefield. I want to start with risk management. Ladies and gentlemen, you have to be very, very aware of what you're getting into, right? If you have any open positions, this is where you want to reduce on your aggression or you want to cut some of those positions, and just for this little window period. Now, I talk a lot about what happens from the institutional perspective, and that is also a very important point that you want to understand. Before you get into any position, understand your risk, understand your infrastructure, and what is behind the market. So this week's the markets are a mix of some optimism and we got some anxiety. We're going to see why. All right. So remember that usually before any non-farm payroll, particularly one like this, where we actually had an opportunity to get it on Friday, last Friday. It comes out on Friday, but for some reason it was pushed to this week. Now, that is already a red flag, right? That means there was a little bit, or if not a lot of pricing in, okay? So let us have a quick review. We have previously seen that, where is that? Let's see. Yeah, so this was the Federal Reserve press release, right? And we saw that the rates were unchanged, but Powell's tone was really, really balanced. You know, he was acknowledging a lot of things here and there. We also saw some voting going on. We saw some people wanting to reduce the rate, and we also had a lot of inside information coming out. Like, for example, we could see that the committee members, particularly those that voted who preferred lower target ranges, right, for the federal rate funds rate by a 0.25 percentage point at the meeting, right? We saw people voting against them, like Anna Paulson and Christopher J. Waller, right? All of them. And we could go for more and more into this, but if you're following them on Twitter or wherever, you might be able to understand where I'm coming from. Anyways, guys, we're left with little time, and the point is that I want to drive to you guys is, before you get into any trade, right? You gotta be able to break down everything that I just say. You have to understand the macros, the micros, what is driving every price, right? Every major currency, every basket or any instrument, right? So the setup is very simple. We got bias mapping. What you want to do is map out your zones, right? Let's take, for example, we know that gold is usually what people love to trade most on non-farm payroll. So what you want to do, right? You want to map out on the higher time frame. You want to map out the previous highs and lows. It's very simple. Previous highs and previous lows. Okay, so we have it. Now, if the previous highs and the previous lows have already been sort of crossed, that is already a very big flag. It's a red flag. Why? Because you are most likely to get whipsawed and stuck into positions, right? Basing on the fact that we've already seen what happened with the interest rate. So there's nothing much that's going to change. If we look at the predictive forecast here, we have non-farm payrolls at 65,000, okay? So they are predicting, the economists, whoever is behind this particular site, right, Forex Factory, they're saying that, they're forecasting the non-farm employment change to be 65%. That is a reduction of the non-farm employment change. Now, what does the description say? It says that actual greater than forecast is good for the currency, right? So if we get an actual greater than the forecast, it is good for the currency. Reason being is, if we have more employment change, right? More employment change, it means that there is a problem with the labor market, right? And you want to focus on that. So we're going to break that down in detail once the report comes out. Now, once you've mapped out your technicals here, you want to move to the 1 hour, right? And you want to start to identify those zones like equal bottoms or double tops, and just look out for where there seems to be some sort of noise, right? You want to look for areas like these, right? You want to look for areas like these. So a telltale sign would be these institutional participants are usually looking to exploit and, you know, hide their prices and you know, in a sneaky way, get out or, you know, add positions and so forth, depending on the institutional participants. Now, not forgetting the commitment of traders report, you also want to make sure that you're following that. Now, once you've finished mapping, bias mapping, right? I like to call that bias mapping. You want to concentrate and make these zones. Let's see. Okay, you want to map out these zones here, right? These are interesting places that we're going to start to see. This is on a lower time frame, right? We want to check out where are the next areas of interest. Where are the next areas of interest? Now, according to what I see, is this was a deliberate sort of aggressive move right from this point, right? So that tells me that there is something up here. There's something up here going on, right? So you want to look at that as well. That is for gold, right? We have some interesting reactions over there. We also have some, we'll investigate why, right? Why? Now, looking at the entire template, the weekly template, daily, weekly template, you want to look back. You want to look back and look what is really going on. So we have 1, 2, 3, 4, 5, 5 with let's see, with where is that, right, with a gap here. Can you see that gap here, right? There's a gap right there. Now that shouldn't scare you, right? That shouldn't scare you at all. This gap right here, you want to confirm that gap by going to another broker, right? Another broker on the same chart and looking at it, right? Do you see that? Was it filled or not? You can compare both these charts and make a good decision. So we got same chart. You see the difference? Same chart, but slightly different. Slightly different. Now this is another very important idea that I want to explain. You should never rely on candle patterns because they vary from broker to broker. If you see something like this is a pin, you always want to go check out another broker and see, is it genuinely a pin, right? Because instruments like gold don't lie, right? Because they are sort of very, very centralized somehow, right? It's very hard for an institution to pull up their own quotes to a level that really jeopardizes their reputation. So all that should be considered. Anyways, guys, so you got a bias mark, right? Once you have a bias, right, you want to say that, fine, we have a lot of room to sort of get back to this zone here. The fact that we've already come out from the weekly high, right, and we are sort of pushing down, that is something to think about. So there's a high possibility that we might come down. Now, don't forget, this is not a long-term strategy. It's particularly for this news release. Once you're done with the zone marking, you've already you also want to concentrate on a few pairs, ladies and gentlemen. You cannot simultaneously trade, say, 5 pairs, right, at the same time, especially on such a news event. Now, the reaction discipline is you want to come to your time here, and the first 60 seconds is pretty much the noise candle. I've always mentioned this. Depending on your broker, we have different manipulative tricks that they use. Like, by the way, guys, I have an entire explanation on this, so if you're just joining in, please go check out some of my other videos. You want to ensure that you are not a victim to what the market makers are doing. So never trade the first minute, right, unless you're gambling, right? We're not gambling, and I don't advocate for anything. By the way, disclaimer, this is not financial advice. This is just an educative stream, so bear with me, and I'm not responsible for your loss, guys. Ensure that you are using the right risk management. Okay, guys, so we have a confirmation setup. Now, for this particular news event, you want to use stops, right? You could use stops, or you could use limits with good tight stops. Execution wise, what you want to do is 30 seconds to 1 minute. So this is why pocket options comes in here, and the reason I use this is, if you notice, you could use the 3 second, right? 3 second is a good expiration time. Or if you would like to sort of spend more time, which I don't advise, 15 seconds, a lot can happen. And you're going to use the martingale. Go check it out. It's free of charge, right? So if I have a risk of, say, $1,300 US, let's look at that per position, right? What you want to do, it calculates for you the stake. But for purposes of just the stream, I know everybody's asking me about how I trade, and we don't see any profit and things like that. I'm going to show you using just using 0.65%, right? And what I want to do is I'm going to set positions right above here and right below here. But Here's the risk logic. 1 to 2% per position maximum, right? You don't win NFPs by size, remember that, guys? You win by timing. So NFP is not about anything else but timing. It doesn't reward the fastest trader, it rewards the calmest mind. So once that is done, you've had all the explanations, you've understood what to do, the countdown starts, right? What is the time? It's 26. We have 3 more minutes. Let's see. 3 more minutes, perfect. And what you want to do is open this chart as well. And what we're looking for in the summary, all right? The summary is the employment situation, right? It's of course very, very hard to crunch, right? Now, I have a prompt for you guys, right? Where you could just pump all this in and get the keywords. Now, we're looking for the keywords, right? If you look at this particular Excel sheet that I created for my community, right? It has employment category. We have the indicator and we have all the categories like inflation, wages, consumer growth, housing, right? And what it does, it calculates for you the signal. So think about it like a US dollar signal calculator, right? It's an interactive template. You enter fresh Bureau labor statistic data below and it sort of gives you a quick one. But the beauty about it, why I bring down this sort of institutional grade perspective is this, so you can understand not just how a typical retail trader puts stops and gets out, but you want to capitalize. You want to understand when to exit, when to hold, or when not to get in. So that is key. Right, ladies and gentlemen. Now, what does the market psychology look like, right? The market psychology is, we're waiting for the data to come out, right? We have 2 minutes, so rest yourselves. I know many people now, if you go check, many people are already in the trade. Some of them are already setting up some buys and sells because they're basing on this number here, which is the forecast of 65, right? Now, the fact that it's 65, it's lower than the previous, is already a bad signal. And a typical retail trader thinks in the sense that it will be a bad figure, hence it will definitely bring the dollar, it will definitely weaken the dollar, right? And once weakened, we see this price flying up, all right? And this is the trick. When you go to the 1 minute, you start to see price getting up, right? Now, we're not going to rush, right? We are not going to rush. What we're going to do is we're just going to wait. Wait. This is live, by the way. This is not pre-recorded. This is a live video, and you're going to see how I do it. So, NFP is the ultimate mirror. It reveals how fear and greed react in milliseconds. And that's why I always say, please do not chase any fast candle. We're going to be using the 15-minute here, right? Please do not chase the candle. The first candle, all you got to do is wait for the reaction time, right? If gold happens to stabilize around these price zones, right, then we can look for entries. So, how much time do we have? All right, number is out. Okay, there we go. We get the first spike on the 1 minute. We refresh the numbers there. All right, we have 115,000 jobs have been added, right? 150,000 jobs have been added, which is good for the US dollar labor market, and therefore we start to see the opposite move. Now, this is clearly a false move, right? This is a false one. You want to wait, and okay, we see the pump, it's going. All right, now you want to measure. We have about, all right, 0.25%. There we go. Guys, if you're following live, check out the comments, right? You want to ask questions in real time. I'm looking at everything. All right, guys. So this is this candle is indecisive. We have, by the way, guys, if you're missing out, we have a prep checklist that you want to check out. You want to look at the candle reaction phases and the live continuation map that I have for free. So go check that out. All right, guys. So what we want to do is go to this, go right here to this latest release. Let's see what's happening. For those of you that don't know where to get it, just go to the BLS government website. It's official, right? And you want to look for employment and employment change. You want to look for employment situation, and you want to look at the employment summary, which is 8th of May. Okay, what do we have here now? Let's go to the summary. So they're saying in April, average hourly earnings for all employees on private non-farm payrolls rose by 6 cents, or rather 0.2%, to about $37.4. Over the year, average hourly earnings have increased by 3.6%. In April, average hourly earnings on private sector, production and non-supervisory employees rose by 11 cents. Anyways, that is not the key. The key is here. The change in total non-farm payrolls for February was revised down by 23,000 from about minus 133,000 to minus 156,000. So that is a change for March. That was revised up by 7,000. Okay, now what you want to look at is retail trades added 22,000 jobs in April. April, healthcare added 37,000 jobs. Okay, and totaling to 115,000, which is pretty good, right? So the employment change is pretty decent. Now, you might ask yourself a question. Despite the fact that the data has come out really well, right? We had unemployment rate flat at 4.3%, but non-farm employment rate very good. Average hourly earnings is down 0.2%. Now that is a mixed result, right? By the way, guys, those of you that are following the Canadian dollar, we have unemployment, we have the opposite. So if you go check out what's happening with the Canadian dollar, all right, let's see, let's add a symbol here. Yeah, some of the best pairs are CAD US dollar. All right, so we have CAD US dollar. Right, what you want to do is remove this real quick. Let's see what's happening here. All right, so we got a very good move up there, right? And this is very obvious. We have a dollar strengthening, we have CAD. That would be the best entry, right? We have minus 17.7 thousand for employment change for the Canadian dollar. So there you guys, there you get it. So you have a pump there. Anyways, our focus is on the US dollar. So what we're going to do now is move this ray up here, right? And you want to look at where the all right, so we are getting up, we are going up. You want to do some correlative analysis, go check out what the DAX is doing now. The DAX is deep in. Look at the time, 8:35 New York time. Very well. So we're going to wait for the 15-minute to close, right? 15-minute to close. See, this is moving up, fine. It's moving up, fine. There we have it. Not too much of movement, right? The movement usually comes once the data is digested. Remember, we have all kinds of participants now. We got the Wall Street people. We have every kind of bank out there, and all the hedge funds are now just looking at this. We have algo setting in. Most of the high frequency trading comes in the first couple of minutes, so you want to be very aware of that. Right. Do we have any positions going in? Now, if you go to my community, ladies and gentlemen, you'll be able to see some of the aftermath trades. This is very choppy. It's not really a good one. You know, you want to pay attention. So I'd probably have some levels here. What I'm going to do is I'm going to measure this move, right? We have about, we're getting to 0.5%, okay? 0.5%. Now, guys, if you're just joining in, I'm not even breaking down what I see behind these moves. When I talk about that, I mean what your hierarchy, the infrastructure, the mechanics behind it, what your broker is doing. I'm not even getting into that because I know exactly what's happening behind this. So anyways, if you want to know more about that, go check out my my community. Okay, so we're getting out, we're slowly getting out, we're slowly getting out. CAD is really pushing well. CAD is pushing well. We have good moves there. Want to look for any pullback, right? If you noticed, I haven't yet gone in, right? Because we are not playing any kind of games here. We want to make sure that we are getting in and having the right possible decision, right? Okay, so what you want to do is, for purposes of testing the waters, right? Now, a very, very important note here is, if you've noticed, the 3-second entries have disappeared here, which is already another sign that another reason why Pocket Options is actually one of my favorite brokers is because they protect you, right? So if this was sort of in the opposite direction and you had access to it, you'd probably already blow up a certain amount of money. So there's an element of risk here, and of course you don't want to use these bigger time frames on such volatile days. So we're going to leave that. We're going to move back to gold and see what's happening. Okay, we still have the 1 minute. Fair enough. Fair enough. Fair enough, fair enough, fair enough, fair enough. Fair enough. Guys, if you're tuning in live, please comment. Please comment, okay? Comment. I'm gonna put some music in the background, maybe some deep house while we get some positions, okay? right, ladies and gentlemen, now as a ritual, we want to wait, right? So we want to wait till 45, right? First 15 minutes are sort of the calm periods, and what we're going to be doing is focusing on these numbers. Transportation, we want to break down every micro indicator here that could affect coming inflation rates later on. So every number here is very important. We want to break this down, right? Now, there are some other aggregators, news aggregators that you could go check out on my community, right? Where we get real-time news coming in, real-time news, and you want to focus on what the speculative side is as well. For those of you that are looking in, you want to look for the performance reports, see what's happening with the each market. You know, we have currencies, forex, we have indices, bonds, energy, metals, grains, all kinds of things, right? So another nice one is you could let's see, where is this thing? All right, there we go. So we have a performance. You want to look for the performance leaders, and we surely have that particular pair that we're looking for is the US dollar and the gold. So what you want to do is come over here, let us see, there's the currencies, right? All right, currencies, let's see. This is forex. All right, you want to look for let us see what is happening here. All right, what does this keep coming up? What you want to do is, there we go, metals. So you want to look for metals. Let's see what is happening from the centralized fixes here. We have futures prices. We have June 2026 open interest of 4,680. Volume is 49,000, so it's not bad. 49,000. Right, 49,000. Okay, we got open, low, 49,000. Okay. Fair enough. That is fair enough. And what we want to do is metals. Let's look at metals. Gold. So gold made a high of 4.9, right? 4.9. You want to go check that out on the high. Let's see what's happening. 4.9. Let's see. 4.9. All right. Fair enough. Okay. So we are going to get some positions, right? Starting to stabilize. So, ladies and gentlemen, right? It's your boy Tony here. If you're just joining in, we break down this twice a day. You don't want to miss out on anything, right? So what I'm going to do is move to the community where we're going to place some positions, right? Some positions, and I'll send you some good signals. Remember, guys, to follow me, right, across all social medias, YouTube, Instagram, TikTok, and everywhere, right, for daily setup, signals, and all kind of stuff. Smash the like button, right, share the stream, set your reminders, because we're gonna break this. Let's see, I'm trying to look for a nice entry here. I'm trying to look for a really nice entry. Anyways, see you guys in the community. Cheers. Stay wise, stay decisive, and stay positive. Peace. And trade like a boat. Cheers.